I think people should remain calm. I try to stay even keel. Even on the way up, back in beginning of October, the market went crazy on the way up, especially gold. I try to stay calm and not too excited. And the same thing when it corrected. Same thing now. But for people who want to get involved in silver, I would say don't go in all at once. I don't, if you have a certain amount of dollars, don't go and buy all of it in silver. Maybe dollar cost average and don't worry about the price, because if you do it regularly, you're going to get a period when the price is corrected down. So yeah, I think that's the best thing to do. But it's getting I think we could see next week silver be very explosive to the upside. We could see a lot of volatility as well. And I expect the premiums to go higher for silver, because the dealers, when it's very volatile, they need to have a wider bid and offer spread to protect their profitability. So that's the only thing I would say right now. I heard that from Andy Scheckman last week. I interviewed him. He said the constitutional or junk silver is, it's almost trading at spot, which is unusual. I'm not really picky. I just try to get the best deal in silver. And I think as long as you have silver, that's fine. I think everything will do well. Here in the UK, I like buying the coins of the realm, like the 1 ounce silver Britannias, and I have some like pre-1920 sterling silver coins as well. Those are they're like the junk silver for the UK. And in the US, I would stick to silver eagles and pre-65 coinage. And I guess if you have millions, of course, you might want to think about bars, silver bars, like 5,000 ounce bars and stuff like that. But for the small investors, stick to the coins and maybe some 100-gram bars and stuff like that. I mean, it's very surprising for me, and but I think maybe these central banks are waking up to the fact that, yes, it's good to have gold as more of a reserve asset, but silver will provide more liquidity as well in terms of a day-to-day asset or money or currency to use for the general public. And I see that. I think it's Ronan Manley and Bullion Star. I'm not sure if it's together with Bullion Star. They're helping develop this token in Dubai, silver-backed token. So I'm not sure exactly yet what that's going to be like. But you could go to Dubai and use silver as currency. So I think, and that helps liquidity, because you're not just focused on gold. You have like a bimetallic standard. That's how it used to be in the US prior to 1873. So I think this is truly historic, and it's going to catch a lot of people by surprise, because we've been told that silver will never be money again or be used again, that you need to be into Bitcoin and cryptos. But maybe going back is what it's all about, going back to real money. I mean, Elijah, the name dollar comes from a silver coin called the Spanish dollar, and that comes from the Joachim's Thaler coin. In Spanish, plata, which is silver, also means money. In French, argent means silver, means money. So, and we've only been, let's say, separated from silver as money for about 50, 60 years. I mean, in the 60s, a lot of countries still use silver as money and coinage.
I keep telling people the same thing, and sometimes I feel like a broken record, but it needs to be repeated because markets always test emotions. People need to remain calm. calm on the way up, calm on the way down, calm during the absurd volatility, and calm when the headlines start throwing fireworks into the narrative just to get clicks. Back in early October, when gold suddenly went vertical and everyone got excited, I tried to keep my tone even. And when the market corrected, I kept the exact same tone. The same goes for this week. Nothing changes in the underlying fundamentals, so why should your emotional state? The individuals who get hurt are the ones who panic buy at the top and panic sell at the bottom. I know that sounds cliche, but it's exactly what most people do. They look at a chart, see a candle going straight up, and immediately assume that if they don't jump in that very second, they'll never have another chance. And then when the correction comes, as it always does, they assume the whole bull market is over. Meanwhile, the people who simply stick to a disciplined plan are the ones who come out ahead. So whenever someone asks me whether they should buy silver now, I always say the same thing. Don't buy all at once. Don't go all in on a single entry point. Dollar cost average. Spread your buys over time. Don't chase price. And don't obsessively refresh the spot chart every 15 minutes. In fact, one of the simplest pieces of advice I give is, stop worrying about the price. If you're buying regularly, you'll naturally catch dips without having to be some sort of trading genius. There will be weeks when silver corrects and you'll be glad you didn't buy all at once. There will be weeks when it spikes and you'll be glad you have at least some exposure. And the truth is, most people who end up with meaningful wealth in precious metals didn't get that wealth by perfectly timing bottoms. They got it by owning the metal during long periods when the financial system was quietly eroding underneath everyone's feet. Now, looking specifically at silver, I think we're approaching a moment where next week could be extremely explosive to the upside. Not just a little volatility, but possibly the kind of volatility that makes new investors nervous and makes old investors smile. When you combine the technical setup with the growing physical shortage, the rising central bank interest in silver, and the remonetization trend that's emerging, it's hard not to see something big coming. And that's before we even mention the geopolitical tensions or the national debt situation in Europe and the United States. When everything is this fragile, silver tends to wake up violently. But with violent moves come wider spreads. The premiums will go higher because dealers need to protect themselves. When silver moves $1 in 15 minutes, dealers can't possibly offer tight spreads or they'll get wiped out. So people should expect wider bid-offer spreads. That's not manipulation. That's not some grand conspiracy. That's simply how markets work when volatility spikes. Even Andy Schectman mentioned recently that in the US, the constitutional or junk silver was trading very close to spot, something that's extremely unusual. Usually junk silver trades at a premium because it's recognizable, convenient, and often preferred by small buyers. But during high-stress periods, premiums behave strangely. Personally, I'm not picky. I don't have emotional attachments to specific silver products. I just try to get the best deal available at the time. Whether it's Britannia's here in the UK or pre-1920 sterling coinage, which is essentially our version of junk silver, or even 100-gram bars, it's all silver. As long as you have silver, you're fine. And in the United States, the same logic applies. Silver eagles if you want government-minted coins, pre-65 US junk if you want liquidity and divisibility, or bars if you are putting in serious money. If I were sitting on millions, I would certainly consider 1,000-ounce bars or maybe even 5,000-ounce bars. But for small investors, coins and modest bars are perfect.
I think basically physical demand for silver is overwhelming the paper market. And 3.5 years ago, or a little more, we had the silver squeeze movement, and that didn't really go anywhere. We got to 30, and then there was a lid there, mainly because the big sovereign buyers of physical silver that we're seeing now, and also big investors, they weren't interested in silver. They might have been buying ETFs, but they weren't interested in physical. But now everything's changed, And I think that's why silver is picking up. And also silver has still to catch up with gold, because don't forget, gold in 1980 got to just below 900. And now we are here at, I think, 4,200 as we speak. And silver got to like around 50 in 1980, and it's just moving above 50 now. So I think, since mid-October, there's been a correction, and a lot of people weren't too sure if silver was going to make it back up. But I think this is very significant that we made it back up, and we've made a new high. Yeah, gold is lagging, but I'm not concerned about that. I think if you look at the gold-silver ratio, it's breaking down, which is a good thing. Back in the 70s and also in 2011, towards the end of the bull market, silver really caught up and went higher. And I'm not saying the bull market is near an end. Precious metals, I think, is far from over. But usually it's good to see silver leading the way. For me, the most important aspect is that actually central banks like in the Middle East, like the Gulf Cooperation central banks, even Turkey, Russia, China, they're all starting to buy physical silver. And I've even heard that Dubai now, they want to they're creating a tokenized silver instrument. Basically, they want to make silver kind of money again, which is quite amazing. I don't know if you saw the other day, Dubai, they showed this silver bar. It was 1,971 kilos, so almost two tons. They're really into silver. We saw that India is going to allow individuals and companies to use silver as collateral for money, for loans, excuse me. So yeah, up until 6 months ago, the reason people gave for silver underperforming gold was that, banks only buy gold, they never buy silver. But
the thing about silver that people consistently underestimate is how quickly the psychology surrounding it can flip. For years, nobody talks about silver. Nobody thinks about silver. Most investors can go an entire decade ignoring it completely. And then suddenly the price moves a few dollars in a single day, and everyone starts asking questions. And when silver finally breaks a major resistance level, especially a multi-decade one, the silence evaporates overnight and the crowd shows up all at once. But by then, the easy part of the move is already gone. This is why I always emphasize the quiet moments, the stretches where nothing appears to be happening. Those are the periods when silver is quietly transferring from weak hands to strong hands. That's when the stackers accumulate and the speculators yawn. Those are the periods that precede the violent upside breaks. And if we look at where we are right now, it feels like one of those transitions. Except this time, the pressure under the surface is far greater than anything I've seen in years. And one of the reasons the pressure is so great is because of how interconnected everything has become. For example, the Japanese stimulus package that was announced recently created a ripple effect across global markets. Most people don't associate Japanese fiscal policy with silver, but it's all part of the same plumbing. When Japanese government bonds start blowing out, when yields spike, when liquidity gets squeezed, it triggers unwinding in markets everywhere. People who were leveraged in tech stocks or crypto suddenly need cash. They get margin calls, they start selling whatever they can, including precious metals mining stocks, to raise liquidity. That's why we saw gold stocks getting hit hard, even though gold itself barely moved. This is the part newer investors don't understand. Sometimes the metal holds up beautifully while the miners get smashed, and sometimes the miners run ahead of the metal. These dislocations are part of the volatility. If you've lived through enough of these cycles, you don't panic. You simply recognize the signs of forced selling, and you remain calm. Forced selling tells you the system is under stress, and historically, systemic stress is one of the best long-term environments for precious metals. It's the same story with Bitcoin. I know a lot of people get emotional about crypto, but I look at it the same way I look at any asset class. What is the leverage? What is the liquidity? What are the structural vulnerabilities? And right now, the crypto space is showing all the hallmarks of a bubble that's losing oxygen. When you have ETF redemptions, corporate treasury holders needing liquidity, leverage traders unwinding, and a ton of margin collateral tied to an asset that suddenly drops 20% in a day, you have the ingredients for cascading sell-offs. And ironically, all of this is happening just as gold is breaking out and silver is waking up. For years, Bitcoin overshadowed gold. It absorbed media attention, institutional hype, and the speculative flows that might otherwise have gone into precious metals. But now the narrative is shifting. People are realizing that when you buy gold or silver, you're not entering some digital casino. You're buying tangible money that doesn't need a bailout, doesn't need an exchange, and doesn't need electricity to validate its existence. I saw a tweet earlier this week from someone who said, Bitcoin is down 60% and my gold coin is still sitting here quietly on my desk. You can laugh at the simplicity of the comment, but that's precisely the point. Gold and silver don't require trust in a third party. They don't need software updates. They don't get hacked. They don't disappear in an exchange bankruptcy. They don't freeze withdrawals. They don't need marketing campaigns. They just exist. And the longer our financial system stretches itself into absurdity, the more people appreciate the value of real, tangible assets. One thing I expect to see in 2026 is a dramatic shift in sentiment among investors who previously dismissed precious metals. Many of these investors avoided gold and silver because they were told the world was moving toward crypto-based monetary systems. They were told gold was outdated, heavy, slow, irrelevant. But now gold is leading the performance charts, and silver, with all its volatility, is beginning to follow. When people see metals outperforming equities, crypto, and bonds, they don't need philosophical arguments. The price action itself becomes the teacher. This is especially true for institutions. Large portfolio managers don't care about ideology. They care about performance and risk. And when Morgan Stanley comes out and says they're cutting their bond allocation in half and moving that chunk into gold, that's not an opinion, that's a signal. It tells the entire investment world that gold is no longer an exotic hedge or some eccentric insurance tool. It's a core allocation. It's replacing sovereign debt as a store of value. That's monumental. And then you look at central banks. For years, central banks quietly accumulated gold. In 2022 and 2023, they bought at record levels, and 2024 wasn't far behind. But what's more interesting now is the way central banks are beginning to reevaluate silver. They're recognizing that while gold protects reserves, silver lubricates economies. A bimetallic future is beginning to look more realistic. And when central banks shift, they don't nibble. They move in hundreds of tons. That's why projects like the silverback token in Dubai are so fascinating. It's a sign of what's coming. A world where people use silverback digital tokens to transact, redeemable for allocated metal. It's a bridge between old world money and modern payment systems. And when innovation makes silver more accessible, demand increases, not just from investors, but from actual users. And let's not forget industrial demand. A single large-scale solar project today consumes more silver than entire countries used to mint coins in the 1800s. The green energy push is relentlessly silver-intensive. You can replace copper with aluminum in many applications, but you can't replace silver in photovoltaics. You can't replace silver in high-end electronics. There's no substitute that performs the same way. Meanwhile, mine supply is stagnant. Some analysts even say we're entering a structural deficit that could last years. We're in a bizarre situation where both the monetary world and the industrial world are converging on the same metal at the same time. When those two forces collide, you don't get gentle, orderly price appreciation, you get fireworks. This is the fundamental mispricing that has been building for decades. Silver has been treated as a cheap cousin, a side thought, an industrial commodity with a tiny monetary niche. But that's only because the fiat system made people forget the role silver played for thousands of years. Once you strip away the illusions created by central bank policy, silver looks dramatically undervalued.